Every trader needs to understand volume, sentiment, and supply and demand zones, but juggling separate indicators for each can clutter your chart and kill your clarity. So we've built a single tool that fuses all three into one powerful, streamlined system. It doesn't just show you each element, it shows you how they interact in real time. In this video, you'll see exactly how it works, how to get it, and why it could be the tool that transforms the way you trade. Let's dive in. Volume is a core pillar of most trading strategies, but raw volume alone only tells part of the story. A volume profile takes it further by showing you where volume is concentrated across different price levels. From there, we can break down the volume into buying and selling pressure, giving us a sentiment profile that reveals where bulls and bears are stacking their positions. And when we combine both profiles, we uncover key imbalances in the market. Areas of surplus become supply zones, and areas of deficit reveal demand zones. Seeing all three in one unified view gives you powerful insight into optimal entry and exit points. Now let's dive into the settings. This indicator offers a wide range of customization options to fit your trading style. One of the key inputs is the volume data source dropdown. Here, you can choose from 7 different ways to pull volume data, depending on your market or data preference. Right below that, you'll find the value area percentage setting, which is set to 68% by default. This determines how much of the profile is considered the value area. Lowering this number narrows the range and lets you hone in on areas with even higher volume concentration. Under presentation settings, we've added full control over what's displayed. Want to focus only on demand zones and sentiment? No problem. Prefer a clean view of just the volume profile and sentiment? You can toggle elements on and off with ease. No need to stack or swap indicators. Further down, there's the number of rows setting. Increasing this gives you more granularity in the volume profile, while decreasing it helps you simplify the view by focusing on broader zones. And of course, you'll find full styling controls for adjusting the colors, so you can tailor everything to your chart theme and visibility preferences. Now that you've got a solid grasp of how the indicator works, let's walk through how you can actually use it in real trading situations, so you can start applying these insights with confidence. In this example, we've used the indicator to draw the full profile, and the first thing to spot is the point of control, shown by this red line. Notice how it's gradually moving higher. That shift signals growing interest from buyers, indicating that demand is building and price is likely to trend upward. Knowing this, we're interested in going long, so we then need to identify the demand zones. We're looking for prices to dip outside the value area and enter a region where demand is stacked. In that region, also notice the sentiment profile. You'll see a heavy concentration of buyers in this area. Since there are 2 demand zones forming a range in this case, we'll focus on the midpoint as our area of interest. But we don't just buy blindly, we wait for confluence, and that's where the signals and overlays algo comes in. Specifically, we'll use contrarian mode, which is designed to detect potential market tops and bottoms. Once we get confirmation from this signal, we're almost ready to pull the trigger. But before entering, we need to define our target. We aim for the point of control inside the value area, since that's where the majority of traders are likely positioned and price could face resistance. For the stop, we'll place it at the midpoint between the bottom of the value area and our entry. If the setup gives us a risk to reward of at least 1 to 1.5, we're good to execute. And it really is that simple. By combining the key elements of this indicator, you get a clearer read on market context and a smarter way to time high probability setups. Now here's something crucial to keep in mind. Just because a setup appears doesn't mean you should take the trade. In these setups, risk to reward still rules everything. In our example, we measured the risk to reward before entering, and that gave us the green light. But look at what happens next. As price reaches the point of control, the market briefly pulls back and exits the value area. Interestingly, we get another confirmation from the signals and overlays toolkit. But here's the key difference. When we map out the target, the risk to reward is under 1 to 1.5. Yes, the market does continue higher, but that doesn't mean it would have been a good trade. A trade needs to make sense on its own terms, not just in hindsight. Otherwise, it could just as easily have gone the other way. And that wraps up our deep dive into the supply-demand profile, a dynamic tool that fuses volume, sentiment, and zone detection into one clean, powerful system. It's built to give you instant context on where buyers and sellers are positioned and help you zero in on the most reactive areas of the chart. You can try it right now, completely free, at LuxAlgo.com/library. And don't forget about the signals and overlays toolkit we used alongside it. With features like contrarian mode, it's designed to catch market turns and add precision to your entries, especially when paired with volume and zone data. It's also available risk-free for 30 days at LuxAlgo.com. Follow us on X for more setups and market updates daily. Thanks for watching. Stay disciplined, trust your setup, and we'll see you in the next one.